Hello, good morning. It's Monday the 26th. I'm FX Plu and this is the market brief. So the UK remains on track to fully reopen the economy by the middle of June. All the COVID data is pointing in the right direction and heading down as the vaccination programme rolls on. Economic activity should return to pre-pandemic levels faster than analysts ever thought originally possible. Goldman Sachs has even been on, making the call that the UK economy will grow by 7.8% this year. Wowzers, that's even topping their call for the US recovery. Punchy stuff. A Reuters poll has forecast a more reasonable 5% growth, but at either level, we'll take it. Last week, PMI data for manufacturing and services both beat expectation, coming in around the 60 level, but without much on the calendar this week, sterling will be more likely driven by dollar developments. Despite all the confidence in the UK economy, the market seems a little unwilling to drive sterling over the 140 level against the dollar. Last week we touched 140.10 briefly, but we opened the new week from around 139. Over in the US, the Fed meeting this week may well see Powell provide a little more forward guidance over their plans to deal with rising inflation. Last week he said that inflation over 2.5% wouldn't be tolerated, so the market shouldn't expect inflation to remain over their 2% target for very long. Wider market sentiment is split at the moment between those who think that keeping an accommodative policy in place for longer will lead to a more solid recovery, and those who are naturally a little concerned that the Fed doesn't actually have a robust plan in place to deal with rising prices. We'll see what the Fed meeting does this week to calm their nerves. And then, of course, there's the question around the abandonment of the strong dollar policy and whether the US is effectively joining the ranks of the currency manipulators in order to gain an advantage in international trade. Plenty more to run with that story, I'm sure. Last week we saw the dollar index break several support levels, dropping below the 91 level, and euro dollar continues to defy gravity. We touched 121 last week and we open around that level again. And there doesn't seem to be much interest in shorting the single currency. We're even seeing calls of up to 122.80 before the current trend reverses. It's pretty punchy stuff. Apart from a brief spike in January, we haven't been there since 2018. Goodness me. Right, well, that's it from me this morning. Do have a great day. Kick off the week on a high, and join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.